I think one of the common mistakes which people make is to follow the performance. So if some particular scheme or some particular fund has done well in the last 1 year, people follow that. But I would say that you should look at a slightly longer horizon, let's say 3 year, 4 year period, to see the consistency of the fund before you decide. I think the first introduction happened because I was in the industry, I was aware of mutual funds. But I think the first real introduction happened with the distributor or whoever was managing your insurance policies and so on. Normally, he's the one who introduced me in terms of getting me to invest. Otherwise, the awareness was always there because I was anyway part of the industry. I was working in a brokerage at that point of time when you start earning your first, real income. So the awareness was there, but the real introduction happened through uh, the agent or the distributor who was also managing my insurance policy. So I think the mutual fund industry is seen good growth, and as the economy grows over the next 3 to 5 years at 6-7%, I think the disposable incomes are also going to grow. And the savings culture is anyway very ingrained in the Indian system. So I can only see it growing at the same pace, if not faster, because still now the penetration of the mutual funds is still very low. And to that extent, I think the growth outlook, whatever growth we have seen, I think the same rate will be continued for the next 3 to 5 years. The right mutual fund, actually, you should not think too much about just switching from one category to other category. I think you should think about three broad categories. Three broad, not make it not over complicated. The first category is what I call as the hybrid category, where you have some capital protection. You manage your risk like the balanced advantage fund or the multi-asset fund is in that category. I would say put 1/3 there. I'm saying for an average investor. Then the next 1/3 of the money you should put it in the diversified funds, say large and mid cap or flexi cap or multi cap, which covers large cap, mid cap, small cap, all categories, because that is what India is going through. You will get growth in all the three categories. And the last 20-30% can be for aggressive high risk, high reward kind of fund, whether it is a small cap or a mid cap or a thematic fund, um, like the infrastructure fund, and so on. So I think you have to think in these three broad categories and not have more than 8-10 schemes across these three categories. I think that's how you should think about it. If you look at someone who's just starting and who's in early 20s or late 20s, maybe, you can go directly to the higher risk categories first or the diversified. He need not have a hybrid category. But over a period of time, as your wealth grows and all that, you need to have all three categories. So it is not necessary that everyone should have all three categories, but this is an ideal mix. But it's an ideal mix for an average investor who is little older, who is having much more wealth. But as you grow, your mix should also change. Initially, you can be more in the high risk, high reward segment and the diversified equity segment, and then move to hybrid as and when your savings grow. I think one of the common mistakes which people make is to follow the performance. So if some particular scheme or some particular fund has done well in the last 1 year, people follow that. But I would say that you should look at a slightly longer horizon, let's say 3 year, 4 year period, to see the consistency of the fund before you decide. Another common mistake which people do is to stop their SIP when the markets have declined. That is absolutely the wrong time to stop your SIPs or to withdraw your money or redeem your units. So these are more behavioral issues which I think as an investor you should try and avoid. They should start firstly. They should not delay. I think the tendency is to delay. And also they should not try to time it too much, saying that markets have gone up, so let me delay it. You should start. If you're knowledgeable enough to know what the valuations are and whether it has gone up too much, then you start with a smaller amount. Say, let's say if you want to have a 10,000 rupees SIP, just hypothetical situation, you start with 2,000, 3,000 if you think the markets have gone up, and then go up to 10,000 if when you think that the markets have stabilized. But you start. I think the biggest problem I have seen even with my friend circle, and that people have not even started for 15, 20 years. That's absolutely the worst thing you can do. And now there's too much of reluctance to do it, because then you think that it's very risky to do it at such a late stage. But if you start at a young stage, and especially the age which you're talking about, the idea is to start, even if it's a smaller amount. A lot of people, even in my age group, I see so many examples of people who were not capitalized on this and not used this for last many years. So the earlier you start, the better it is. Yeah, it's a nice, easy to look at format. Especially I like the section on the things on fund performance and SIP performance. Those things are standard, but still nicely laid out. The outperformers and the stocks which have done well in the portfolio, I think that section is nice, because I don't see it in such easy format in other apps. And also the comparison.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.